Good evening and welcome to the Trading the Tech show for today is Friday, actually. It's already changed the day, 12 o'clock here. So it's Friday, October 2nd, 2020. And it's been a busy day for me. At least the evening has been busy for me, but it's been wonderful. I get to really hang out with some really great people. Some of my people here in Brazil, but then also here, on as far as iLi Academy is concerned as well. So I'm really excited about the future and seeing where all of this takes us, where all of this goes. So I appreciate you being here with me and checking out the show. We're going to go through some charts as we always do on the Trading the Tech show. Now, today is Thursday, yesterday was Thursday, and then so today is Friday, so we don't have a show tonight. So this is the end of the week. So we're going to keep that in mind because it's a non-farm payroll Friday as well. So we want to be a little bit cautious and careful about what we're trading at this point in time because it's the end of the week. We're going into the weekend. And then we've got non-farm payroll out in front of us as well today. And I believe that's coming at 8:30 Eastern time. So be mindful of that when you're trading. If you're putting on positions for a short-term basis, just know that that's out there so that you don't get caught in anything too tough to get out of. So we're going to run through some of the charts here tonight. We're going to see kind of where we are based on what some of the things that we looked at last night, and we'll just kind of review some of what we've done. So we did kind of extensively talk about last night the moving averages and how to spot trends. So I'm really not going to go over that a lot tonight. I'm not going to really delve into that because last night's show kind of showed us that. If you didn't see it, go back and check that out. We're just going to kind of run through the charts here, maybe within a half an hour's time, and just kind of see where we are. So we talked about this Aussie CAD. This is our 30-minute chart. Last night we looked at this and we drew these lines here. We dropped in our horizontal lines as a support here at the bottom and a resistance here at the top. So I was saying that, we might want to buy at the support and sell at the resistance just because we've been trading off to the right here. So as you can see, we had traded above we traded yesterday, we traded above the resistance level here, and then we went right back into the channel, right back into the channel, and now we're below support. We're a little bit below our 720, but then we're also here above our 200 as well, and pretty much the 200, 150 are still in order to the upside. So I'm going to let this maybe come down. Maybe if it gets beyond this 200, then maybe I'll drop an order on the 200 or here at this support level that we drew. So that's what my analysis would be for the Aussie CAD at this point in time. Let's look at the Aussie Yen. So on the Aussie Yen, we were looking at the pair and just trying to figure out and decipher whether or not it is really going to jump over the 720 and stay up above the 720. It did jump above it, didn't quite test, kind of came down here and tested just a little bit, but it's pretty much stayed well above the 720 most of the day until the end of the day. And the last probably few hours, we've come down here and started to test the 720. But our 200s out here, our 100s out here, our 50s out here in order. And so we're probably going to continue to head to the upside, but maybe we're getting that pullback that we're looking for so that we could buy. The 720 is kind of holding up the price right now. So if I was going to do anything, I'd place my order here where the 50 is. This 50 is our blue moving average. I'd have my order maybe here out front. I'd right click, go to trading, go to buy stop, and then place a long order there so that if the market does go back that way, it kind of picks me up and takes me up. Right now, we're above the 720 as far as the rate. So we're going to see if the moving averages continue that way or rate continues that way, then maybe we jump above the 720 and keep going. Now, I'm going to show you something here. Let me make this a little larger here. So I'm going to show you something, another strategy that we've traded in the past with success. This is the catapult strategy, and it has to do with the 50 moving average. We used to do this on like a 90-minute chart because this company I was working for provided a 90-minute chart. Now, you're not going to find that in MetaTrader because they go from 60 to 4 hours. So, but it can work on the 60. We can do it on the 60 and then maybe on the 4 hour as well. But what we're looking for in the catapult trade is a candle that straddles this 50 moving average. So hopefully you can see that. Let me bring it up just a little bit more. You can see how the 50 moving average is going through the body of this candle. And so that's the sign that we're looking for. We're looking for that. And then the next thing we do, we don't do anything right then. We wait for the next candle to close. If that next candle closes and it's a red candle, as the one that straddled is, then and it closes, then we look at what's the low of this candle. If you put your cursor right on top of the candle, you can see the low was, let's see here, 75.59. So my short's going to go at 79.49. So I'm going to go ahead and drop this down here somewhere. Let's see, what's my parameter? It's going to be, or 75.49. I'm sorry. I think I said that wrong. I didn't mean to say 79 if I did. 75.49 would be our entry point. So that would be 10 pips below the, or below the close actually, I'm sorry. So it's 75.641. So we're gonna go 75.541. So I'll come up here to 75.541. This would be my entry point. So we're away from the market here. It's got to travel the 10 pips to put us in the market. So it's got to give us some confirmation that it's going to head that way. And then that would be our entry point. It's a pending order out in front of the market. If the market goes that way, picks us up and takes us down with it, that's great. You know, and then, so we play it like that. We're looking for a straddle. We're looking for the second candle to close the same way. And then we're looking for 10 pips below the close of that red candle. We subtract 10 pips, which is going to be 75.54, 541 actually in this situation, and this is where my order goes. So I'd right click and place my sell order there. So I just want to show you that. That's another trade strategy that we use, the catapult. So that's one way. If you're looking at this and say, I think it's going to go down here, you can trade the catapult that way, right? That's another trade that we can take. So we can have an order up here on the 50 going up, and then we can have one based on the catapult, and we'll see which one actually, you know, yields pips for us. Looking at the Aussie New Zealand here on this 30-minute chart, we know that we're below our 720. We've got our 200, our 100 are out of order right now, but our 50, 21, and 8 are in order. So we'll be looking for any pullbacks to maybe the 50 or so before we're looking at an entry to the downside. So I think that we may resume this trend that we had back here. So my idea here is that we didn't get very far above the 720. So we're probably going to go into a downtrend on this Aussie New Zealand. So we should be taking short trades here. All right. So we'll be looking for a continuation of this move to the downside. As far as the Aussie US, kind of the same thing going on. We didn't spend a lot of time above the 720, just about a day or so above the 720. And now we're trading below it. Rate is below it, but our moving averages haven't all flipped over just yet, but we are underneath the 720. The 720 is here, and we've traded below that. And now we're going to see whether the moving averages help us to resume this downtrend that we were in way back here, back maybe a week ago or so. So if I'm looking at this, I'm looking for, I'm either looking for a continuation of this move to the upside, which could very well happen. Maybe this is just a pullback here. Maybe it exhausts itself. I can have an order here on my 100, maybe one here on my 50. Here I'd be a little conservative, maybe put it out here on my 50. If it trades above the 720 again and takes me in that order, that might be a great place for us to go up from. If not, then we're looking at a move to the downside. We could run this as catapult. If we look at it, we got a straddle, right? We got a straddle of this candle. It's because we have an open and close on opposite sides of the moving average, the 50. We got a second candle that was red, right? When it closed. And then, so we look at the close, 71.66. My entry is 71.56 for short. And from that, we tend to get some really nice trades out of that. I mean, we get hundreds of pips out of that particular trade. So it works out very well. On the CAD yen, we are above our 720. We have our 100, our 200, our 100, and our 50 in order to the upside. The 21 is just kind of melding with the 100 or with the 50 right now. The 8 is kind of flat here as well. So it's not inconceivable that we may continue to the upside. We might place an order here on this 8 or this, I mean, not 8, but the 50 right here just above the 8. And our expectation is maybe that this trend will continue to the upside. You can see too, let me go back here. You can see we have a buy that went in here on our auto trader has a buy. The platinum auto trader has a buy. And so we're profitable there too. The buy was at, let's see, let me get onto the order here, see if it shows. The buy was at 79.23. And now we're up in the 79.40s area. So we're profitable on that trade. We've been up as high as 79.55 or so. On the Swiss yen, as we go through here, we see that our rate is just peaking below the 720. We're coming off a downtrend prior, and then we traded all the way up to the 720, but it doesn't look like it's holding as a support for us right now. We're going to see what happens here. We do have moving averages trending to the upside, but we're going to see if this actually flips over because rate is below our 720 now. So we'll see. You know, I'd be looking at, if I do anything, I'd be looking at maybe a buy on the 50 as this comes down, or maybe a buy on the 100 if it trades below the 100. But I'd let it get significantly below the 100 before I place that trade. All right. Looking at the Euro Aussie, we've got rate underneath the 720, but it's just kind of touching it right now. It's finding out whether this is going to be resistance for us now. It's kind of been touching it a little bit for a couple of hours now. It's just kind of hanging out there. We've got our 200, our 100, and our 50 in order. Our 21 actually still in order as well. The 8 has kind of crossed over the 21 and the 50. So we're going to see if this holds for us, if this resistance point holds for us here at the 720. If not, then we continue further down. So I'd be looking maybe to play this as maybe a catapult trade. If we get a, like we had this green candle that straddled our 50 here, maybe we play that for a trade to the downside. Or, you know, and we're beneath the 720, so that's really what my analysis would be. I really wouldn't be looking to take a trade to the upside. Even though back here we had trend to the upside, but it looks like it's kind of changing direction for us now. So I'm more interested maybe in a short trade. Maybe I place my order here on the 50 for a short trade. Okay. For the Euro CAD, kind of the same thing. We're now trading below the 720. We stuck around that area for quite a bit. And now it looks like we're trying to get away from it again. We did test a move away before a few hours ago, but now we're testing that again. And we've got open trend pretty much from the 200 down to the 8. We've got open trend to the downside, and we're trading below the 720. So if I'm taking orders here, I'm taking short trades. Here, I'm looking for opportunities to short. I'm not going to catch this falling knife right here because it's above my 8, you know, it's well below here, but it's trading away from my 8 moving average already. The rate is below that. So I'm not really trying to catch the falling knife here and have it jackknife back the other way on me. I'm going to wait till it moves back and proves my price, and then I'm going to get in based on the 50 or this 100 moving average. For the Euro Swiss, we looked at this yesterday. We looked at maybe the Fibonacci. We placed a Fibonacci from this high to this low, and then we were saying, you know, we get in on our 23 and our 38, and then we look for the 50 and the 61.8 as our target. So we got real close to the 61.8 here. We did pass it back here. So it really just depends on at what point you took the trade. I really don't like to do it a little bit later. Like here, maybe I would have created another Fibonacci from this high to this low. because we had one here, an extreme high low in a short period of time, but then we retraced that move and then we got another extreme high low. So I wouldn't use this Fibonacci for this. There's no rule saying that you can't. There's not. It's just for me, I'd like, this is the freshest information. This is the freshest place where we placed that high and low. So I'd probably change it to this high and low. If I just came across it on a chart, I'm going to redraw that. I'm not going to rely on the old one. But there's no rule saying that you can. I just want to enforce that because this is up to you. This is kind of what you want to do with your trading. What you see on the chart can pay you. So don't feel like, oh, well, Derek didn't say that I could use this one. I have to use the previous. No, you can find out what those points are. You can develop those points yourself. And as you get more comfortable with it, you will. So you can see we passed through the 23.6. We did pass through the 38.2, the 50, and the 61 targets were taken out for this set of Fibonacci's, right? From this high to this low. So we did retrace that at least the 61.8%. So we would have been profitable on that trade. If we look at the euro pound, I'd be looking at maybe a Fibonacci retracement because we have such an extreme high and such an extreme low here. Then that's the Fibonacci trade I would have taken from there. All right, that's what I would develop. Once I have the high and once I have the low, then I'm looking to develop my Fibonacci levels for the retracement. How far are we going to go back? And we did hit our 61.8. Rate is still above the 50. So that would have been a profitable trade for us. But if I take that Fibbo off, what does it look like if we're not trading the Fibonacci retracement? Let's take a look. We're just consolidating here. We've got this wide, move up and down. There's basically a whipsaw, because we had this hard move up and then within a couple hours, we retraced that move 100%, right? And then we bounced again. This is really just the whipsaw that really confuses traders, and you don't want to get caught on the wrong side of that. So today was very good for, I think it was the pound that was giving us those whipsaws today. So I know there's a little bit of agony. So if your Instagram feed is not jumping with people excited about the money they made, that's why. So, so a lot of traders just, especially when they're inexperienced, get caught in this type of thing. And, they're chasing the market and they're getting crushed in the market. But if we look at it as far as moving averages go, we don't have trend here. The only thing we know is we're trading below the 720. But other than that, the moving averages are not really in order. Our 100s here, our 50s here, our 200s in the middle, our 21 and our 8 are kind of at the top, and the 8 looks like it wants to jump over the 21. I'm going to walk away from this one for right now. There's not really an opportunity that I see here yet. We're consolidating, we're getting smaller, our highs are getting lower, our lows seem to be getting higher. We're just consolidating. A lot of that might be due to the news that's coming out. So I'd kind of leave that one alone. It's not really the trade that I'd be looking to, jump into today. As far as the euro yen, taking a look at that, we are trading now below the 720. We did have some time above the 720, but now it looks like we're trading below it. Could be just a test of the 720. It's not going to stop all the time directly on the 720. Maybe it goes a little bit below. But if we close enough times below the 720, then we might consider, okay, we're going back into the downtrend that we had experienced before. So we're going to have to watch this and see. My 50 is way up here. So if I place a buy order on the 50, that's perfectly fine. If we resume trend to the upside, then great. If not, then we travel down and I didn't get involved in the trade, right? So, and then I can just cancel that trade and we'll look at what's the setup for the downside. Euro New Zealand, wide open trend to the downside. The only thing we're waiting on really now is the 200 to jump over this 720. So before that happens, there's possibility we might get a pullback. We've already experienced a couple that kind of got close to the 50. So at some point, we're probably going to go back and test the 50. We've got a little bit of a floor going on here, down here below this 176.40s area. We've got a little bit of a floor happening right now. And so, we're going to watch how this plays out. We might trade back towards the 50. If we jump over the 50 as far as the rate, then I drop my order on the 50 for a short. Because there's nothing about this that says I'm going long at this point in time. There's no telling it to turn around, but right now, just looking at it and analyzing it, that's not what I see. I see wide open trend to the downside, and all we're really waiting on is the 200 jump over the 720 to confirm it. As far as the Euro US, we spent a little time above the 720, right? Just a little time up above it, didn't maintain that. It doesn't look like it held as a support because now we're down here flirting with the 200, and we've got our rate and our moving averages beginning to cascade over. What I'd be looking for is maybe a resumption of the trend to the downside that we had before. So maybe the US dollar is going to give us some strength still. It's kind of coming off its lows, right? So maybe traders are just trying to rebalance it just a little bit. Maybe they just went a little too far. And we're seeing that with the dollar pairs or the majors. So we're sitting on the 200 right now. That's probably going to hold us back a little bit right now. But if I'm looking at this, I'm looking at we're below 720. Maybe at this point, we didn't spend a lot of time above the 720. The way it's rolled over, I'm looking at this as a short opportunity. I don't want to go here. I want to go when it pulls back and the prices improves, the price goes higher, so I can short at a higher place. As far as the pound Aussie goes, we're looking at this. We're right on the 720 right now. We're actually approaching it from below. And then we've got the moving averages kind of in order to the downside, except for the 8 jumping over the 21. So this is kind of a consolidation a little bit here. This is what I'm talking about, the rate moving back against the trend. And so this might present an opportunity for us. If we get too much more past this 50, I'm going to drop my order on the 50 here in blue. I'm going to right click and drop a sell order, a pending sell order to the downside here. And that would be my analysis for that. Pound CAD. We had this range. See, we've got our white lines kind of going across here. We did have this range. Most of the trading was happening within this range, right? But then, like I said, this is the pound. So we got those whipsaws today. So we whipped out of there. We ripped right back to it across the range and then back down across the range too. So had we been trading just the range alone, long at the bottom, short at the top, we could have made some pips today. We had a bunch of clients that were successful with that today. So all the pound trades really just kind of paid us, and multiple times actually today. We had people who made money multiple times. So this is great. But it was easy to see from last night. We could see what the range was. So even if we're just set up for the range and we set up to trade the range the proper way, we could have been, we would have been in a great place here, because this trade, this rate didn't come back here for a while, didn't come back to the place where we would buy for a while. Once we got significantly below the horizontal line here that is acting as our support, then we can drop our order to go long on this level. And when it finally came back around, even though it didn't look like it was coming back, it did come back around and it paid us. Okay. Excuse me, I had to sneeze there. So pound Swiss. Excuse me, sorry about that. Pound Swiss, we're above the 720 here. And our other moving averages are just a little discombobulated here. They're just not in order. So we're consolidating at this point in time. This kind of did our whipsaw effect again. We can see where it dropped down a lot, rose back up and dropped down again. And now we're kind of trading in the middle. We haven't kind of figured out what it is that we want to do yet, but we had this wide open trend going on. So that's why we don't want to dump in an order up here, just thinking like it's going to continue to go up, because it can do something like this and cut back across all those moving averages, and just because the fundamental news pushes us in that direction. Maybe it's something in the market that people see and traders see, and they just want to get out, or maybe they're unsure of the news. The news that comes out, they read it one way. Pretty much the early people read it one way, and then the people who take a little bit of time, analyze a little bit, they whip it back the other way. Give me one moment here. I'm going to go blow my nose really quickly. Just one moment. Okay, sorry about that. So I don't know why, just like I had this attack. So, all right, great, a sneezing attack. I need to blow my nose. So, great. So yeah, so we see this consolidation happening in the pound Swiss. So this is not my favorite trade, being that it's Thursday. I'm not really going to jump into much here because I don't have direction just yet. Then I have my pound yen. We see the same action, this whipsaw action to the bottom, then to the top again. Right now, we're just kind of consolidating, heading off a little bit to the downside. We've got lower highs going on. We've got some lower lows going on, but we're sitting on the 720. And our moving averages are really pretty much out of order at this point in time. I'm not doing anything here, not on a Thursday, all right? Pound US, same action, right? You see the pound. So our guesstimate here, even if we didn't know what the news is, we know that the pound had some news occur that caused it to just, to flail around a lot. There's a lot of volatility going on there. And then, so here we are, we're trading now below the 720. We're just kind of waiting for the moving averages to kind of straighten out and give us some real direction here. No telling where this is going to go. So I'm not really interested in trading that. My idea is that there's going to be an opportunity to the downside, but I'm going to wait for it to set up and then pull back to my 50 or my 100, and then I'll progress with it. Because if it's truly a trend and it's truly in trend, it's going to give you the pips. You don't have to worry about it. That's the way the river flows. Right? So, if you think about it, you put your boat in the water and you don't have a paddle or anything, you're just kind of on a raft or something, and you get into a river, doesn't matter really where you got in at, right? You're just going to end up at the end, you're going to end up where the river takes you. So that's all we want in Forex, is to go where the river is going, right? So here's the New Zealand CAD. So we're getting away from the pounds. We're going to see something a little different now in the pattern. So we don't see that kind of whipsaw effect going on because the news didn't really affect the New Zealand CAD. So now we've got our 720 here on the bottom. We've got our 200 here. We've got our 150, 21 and 8, all in order to the upside, right? And so with that order to the upside, that tells us we're in trend to the upside. So our expectation that it's going to continue on to the upside. So with this particular trade, my neighbor's just having some trouble with his son. So coming up the stairs here, so it's kind of funny. But yeah, so we would expect that our trades are going to be to the upside. The trend may continue to the upside. Our 200 just jumped over the 720, so our expectation is it continues to the upside, right? So let's look at the New Zealand Swiss. New Zealand Swiss, kind of the same thing. Our 200 just jumped over our 720. We've got complete order to the upside as far as our moving averages. So what are we looking for? We're looking for this pullback of past the 50, pull back to the 50, pull back past the 50, and then placing our order on the 50 and having it go up, right? So pull back here to the 100 and then having it go forward. So this is something that we can play, and we can play on the way up here. If this is truly trend and it's going to continue on, there's going to be those pullbacks. They're going to provide those opportunities. So don't chase it up here when the rate is beyond our 21 and our 8. You don't want to really be chasing that. You always want the price to improve before you end up buying. So on our New Zealand yen, we're kind of doing the same thing. The only thing is we haven't got our 200 to jump over the 720 just yet. We're kind of waiting on that to happen. Right now, the 100 has jumped over the 720. So our anticipation is that we're going to get maybe a trend to the upside. So we've kind of have it already with the other moving averages. And rate is above the 720, but the 720 is not below the 200. So, we're going to just play any pullbacks. We'll play any pullbacks to the 50, pullbacks to the 100. Those are the plays that we'll make. We want the rate to improve before we get in. It's like waiting for a sale, right? Pretty much everybody's starting to think about Black Friday sales, right? So we're not going to go out right now and pay a premium price for a television or a computer or something. We're going to wait till Black Friday and know that we can get a deal, right? So this is kind of like what we're doing here. We're just waiting for the rate to improve against the trend, and then we're going to get the value that we're looking for in the trade going forward. As far as the New Zealand US, almost the same thing, only we're just about getting the 100 to cross the 720. And then we've got the 200 out here too, that's got to do that process. We're right at the 50 right now. So we've got this pullback to the 50. We've got kind of trend to the upside. We're above the 720 as far as the rate goes. Even though, so if we're going to be a little more aggressive, we might take this trade to the upside. But right now we're on the 50, so maybe we bounce from the 50, but I would let it get significantly below the 50 before I place this pending order on the 50. Maybe at least 5 to 10 pips below the 50 before I'd be interested in placing the order on the 50. I don't want to, because remember we have the spread, so we don't want the rate to be really close, like within 2 or 3 pips, because we're just going to get put in the order. We might as well put a market order at that point in time. We wanted it to get maybe like 10 pips below the moving average. And then that way, if it's going to continue on in its direction to the downside, then it just keeps going. And we're not just kind of sucked into it just because we put our order too close. All right. Let's take a look at our US dollar CAD. Going the other way, really, we've got trend to the downside. Our 8 has jumped over our 21 here. Not so worried about that so much. So it's not wide open trend, but we do have trend to the downside. We can see that. We're here sitting right on this 720 right now. So I want to see this actually break the 720 and actually show some significant strength below the 720 first. Then as it pulls back, I'm improving my price to go short. Okay. But it's a good look here, right? So we're looking at it and we're going, wow, like we've got, we've got trend to the downside kind of setting up. Is the 720 going to hold, or is it going to give way and let us continue on down? As far as the US dollar Swiss, we're above the 720. We're kind of headed up away from the 720 right now. We've got our moving averages trying to cross over, but they're not in order, in a way where we feel like, we've got strength to the upside. We'll see what happens here. It could be changing direction for us here. So this is kind of interesting because we kind of got a breakout bounce here. We got this move down, created a low. We can see the close and the open of these candles here. We're right around the same area. Then we went around, we went up, came all the way back around, tested that same area. And we really didn't close below that area significantly, right? We kind of bounced off the same area and then we bounced to the upside. So we came down, bounced, came back down, tested, and then bounced away. This is a breakout bounce trade for us. So if I'm looking at it, I'm going to draw my little, I'm going to draw a little rectangle in there to show you like my area where I'd probably be interested in buying. That's about my rectangle right there. It's not really scientific. It's just something I see on the charts. So I haven't said, okay, you need to be this many pips away or whatever. It's not kind of like that. What I'd like you to do if you're going to trade this is go, okay, I see where we bounced. We bounced. And as we come down, we didn't close below. We didn't really close below the previous low. So I feel like we're going to head off to the upside. So I draw a little rectangle here in the middle of where we bounce as it goes around. And then I say, okay, this is kind of going to be my early entry. This is going to be my late entry or so. My late entry typically is right about where the low is for this move at the top. As it's beginning to roll over, it's kind of sometimes is setting like a little bit of a floor. And so we kind of use that. But it's not scientific. I won't tell you that it's scientific because it's not. And then I'm either buying here and at the latest point buying here. But either way, if I throw my crosshair on it, from here, if I bought, I'd be successful. That's about 91.85. So now we're up above 92, right? So we're about 20 pips up on that. And if I bought late at 91.96, I'd still be up 10 pips. So, that's what I'm looking for when I'm looking for a breakout bounce trade. So we have a couple of things we got. Then if we look here on the end, if we weren't interested in a breakout bounce, we had a catapult, right? So I'll show you that. We had this straddle of the 50, right? Let me go back here. This one here doesn't count. because the body is down below the 50. We need to see green on both sides. So this is the first time we're really seeing the green on both sides. We get the second candle that closes above the 50. It's also green. And then we look at this and go, it closed at 91.94. So my interest in buying is at 92.04, 10 pips up. And so right now we just have gotten into that order because here's 92.04. And we're just at that point in time where it would be putting us in the order. But you can see that it traveled the distance and then put us in the order. So it's telling us, okay, I'm willing to go this direction. And I'm going to pick you up along the way and take you with me. So there are kind of three ways we could look at this particular chart. So like I said, there's a million ways to really kind of trade the market. So not, whatever the strategy is, just execute the strategy perfectly. Whatever it says to do, just execute it. And that's the discipline that a lot of traders just lack. It's like, oh, well, I know that this didn't quite line up to what I wanted to be. So I'm, but I feel good about it. So I'm going to take this trade. And then when it doesn't work out for them, then it's kind of like they're they're in a situation where they don't really understand why they took the trade. They just kind of guessed on it. And instead of just closing it out, then they're just going to let it hit them. And most people got the wrong lot size. And so it becomes a situation where they've traded too heavy because they're being greedy and they don't want to take the loss. And in a situation like this, maybe, maybe it goes against them quite a bit. And then, that's when bad things happen. So we got to kind of stay away from that. We're captaining our ship in a different way, in a responsible way. So we might make less money sometimes because we're not going to hit the big home runs all the time. Sometimes we get them, but we're not always going to hit these big home runs where we've got thousands and thousands of dollars unless we've got thousands and thousands of dollars deposited. Those whipsaws we saw in the pound trade today tore a lot of accounts up today. I'm going to tell you right now, there's a lot of people who cried today, just because it was just wild. And that's what happens, and it's just because they don't have that foundation, that fundamental that we're going to get, that I'm going to try to teach you and give you so that you don't have to have that pain all the time. So I want you to be successful. Now here on the US dollar yen, remember yesterday I was just saying like, this is not something that's really kind of straightened out from us. We had these moving averages all over the place here. Everything was just kind of discombobulated. So I was like, well, as a trade, I'm not looking to do anything here. I have to have something show up for me that tells me what direction we're going. So we got it, right? We got our 720, our 200, our 150, 21 and 8, all in order to the upside. So now we have trend, right? And since we have trend, now, we've got opportunity to trade to the upside. Now you can get these moves back down into the trend, past the 50 and the 100, and then we'd be looking to buy at that point. We'd look for buy orders at that point in time, but we're going to let it pass the moving averages, maybe by 5 or 10 pips, and then place our order on the 50 or the 20 or the 100, maybe even the 21 if you're aggressive, and have that take us up. It should take us up because it's developed trend. That's the best analysis that we can make right now is, just looking at that. That's part of our strategy is just making the best guesstimate of what can occur right now. So if I'm looking at this US dollar yen, then I'm looking for it to pull back maybe to the 100 or the 200 and have this trend kind of stay intact. Maybe the 8 jumps over the 21, but I'm really, going to be looking for it. Maybe not so much the 21 jumping over the 50. I'm going to let this kind of develop into a bigger trend. So I could go now and kind of go early when this pulls back, or I can wait till they kind of spread out a little bit more and show some more distance between one another. And if that happens, then it's kind of confirming that I've got that trend to the upside. So good. So we kind of learned a lot here tonight. We got some great opportunities. I just want to remind you, tomorrow is non-farm payroll. So be alert, be aware. It is at 8:30 Eastern time. If you're trading, just be mindful of your positions, put in, your profit stops on your trades. Just if you have any fear for, maybe the market going against you, put in your profit stops. You know, take what the market's going to give you at that point. You know, I shouldn't even really say the word fear. I hate saying that, but I guess some people have that. People say, well, you know, I have an inkling that maybe the market might go against me. I feel like the market might go against me. So let me at least put a stop in it. So, you know, when I say we don't use stops and things like that, and then we don't trade with fear or we don't trade with greed, I don't mean that we're not smart. You know, so I don't mean that we don't trade with a little bit of intelligence. We want to protect our profits. If we got profits, we want to protect them because we've already earned them. So we protect it just like we protect our wallet, right? So you know, so we can use a stop in that time. You know, we can say, you know what, there's a big news report coming out. If there's going to be some whipsaws and things, I just want to get out with my profit and not be involved in the nonsense. So that's utilizing the tool at a time that's advantageous to you, as opposed to utilizing the tool on every single thing. You know, to a hammer, everything's a nail, right? So we don't want to be like that with our trading. We want to strategically use the order type for what, you know, what benefits us and is advantageous to us. And then we use other things like lot sizing, things like that, to make sure that even if it did get away from us, the trade got away from us, we're not crying about it and we're not worried about it killing the account. We're trading within what the account will deliver for us. So yeah, so I'm happy that, you know, we've gotten to the end of this trading week. It's been very eventful. It's been very profitable for our auto traders. It's been very good. So I'm just happy that we got the volatility and some people got to really see like, oh, here's the potential of, you know, my auto trader. And there's a lot of new people within the last month or two who've been watching it and been dealing with it and getting some profits from it. But they really got to see it today. It's like today was one of those good days where it's like, even though the market was a little crazy, they were making money, you know, making a good percentage on their account. So we want to continue that. Hopefully, you know, everything, you know, will continue to move in the direction it's moving in, because it's going in a wonderful direction for us. So goodbye for the weekend. Everybody be safe, whatever it is that you decide to do, and come back and be ready for us Sunday night. All right. All right. This is Derek with iLi Academy. Once again, have a great one. Bye.